Alright, hi everyone. So welcome to Simple Value. So today we're going to look at BigCommerce. We haven't looked at this company since its IPO, and it's been doing fairly well. If we look at how things have gone overall, company came on at $24 per share, currently at $76. So if you happen to be buying at the top at $100 or anywhere near that, you probably weren't feeling too good when the share price kind of came down to $63. But recently it's been doing really well after this 18% jump. And big question you must be asking is why? Well, recently BigCommerce just announced their second quarter results will be released in September the 9th. And also some recent data that e-commerce is up 44% year on year. So that kind of just puts a bit of confidence in the market, especially when we consider that, what BigCommerce does is offer people platforms to create websites to sell their products. So if we kind of see that e-commerce is growing, there's a very good chance that Big center of it. Considering them and Shopify are two of the bigger players in this area. Shopify definitely is by far the bigger player, but BigCommerce does have quite a decent market share as well. So if we see e-commerce growing, chances are BigCommerce is going to be influenced by that. So we look at what e-commerce was like in July. July it was 87%, which is pretty good. So we can kind of see that here we're looking at 44% year on year, and then for the July month itself it's 87%, which is pretty good. And then we're going to analyze some extra data which kind of breaks up the trends, looks at the different months. But I just want to highlight firstly, where we're at in terms of evaluation. So in terms of valuation, we're at $76, giving this company about a $5 billion valuation. Some people feel like it's kind of a bit high given the metrics, but you've also got this other group that feels like it's kind of a bit undervalued because of its comparison to Shopify. But if we kind of meet halfway, then this 5 to 6 billion valuation is kind of fair. So at a 5 billion valuation, it's not too bad. I think the market's given a bit of consensus based on where the share price has been trading recently, of about 5 billion. But there's a good chance that it could head higher because this valuation is based on their current growth of around just above 30%, though if we look at the recent trends, their second quarter could be quite phenomenal. So if they can achieve something like 50% or more growth in quarter two, I think that gives this company bit of realization that its potential is not limited to about 30% growth, that it could be much more higher than that. And given their recent capital raising for the IPO, they've got a lot more money and a lot more runway to just really, put more money out there and grow their platform and grow more customers. Whereas in the past they were a private company, they were a bit more constrained when it comes to financials. We'll put it this way, past year they lost about, I think it was about 40 million, but anyway, if we consider that they recently raised 200 million, they could actually burn 100 million a year, and it would still be fine. So compared to what they lost last year, they could easily lose 100 million this year, improve their growth rate dramatically, and I think they'd be better off that way. But well, of course we just have to see what their plans are. But given the current situation, $76 pricing, 5 billion valuation, second quarter data coming out, and if we look at the data here, second quarter will be April, May and June, and we can kind of see for e-commerce, those were the 3 big months. So if we look at this broken down into different categories, we can see alcohol and tobacco that tends to be bought in stores. Yeah, it's pretty interesting that people are actually starting to head online to buy this. And in car parts, yeah, you can kind of understand people want to go in a store, buy car parts, but now they don't mind ordering it online. And beauty and cosmetics tends to be one of those things that have been trending into the online kind of atmosphere for quite a while now. So when we see this increase, it's nowhere as dramatic. Whereas we look at alcohol, tobacco, car parts, the prior year was a bit more straightforward, whereas this year's, there's been a bigger change in terms of habits. And as you can imagine with collectibles, that's also one of those areas where people like to see it, make sure it's real, make sure it's authentic and in one piece. But even in that case, people are actually heading online for that as well. And the same thing with clothing. Actually, like, out of one things that's kind of surprised me, I thought clothing would probably be one of those areas where everyone was already starting to look at online because of the better pricing. But this kind of just changes my view that a lot of the sales still actually haven't gone online yet, and it's only in the recent months that people are shopping online more. But you can kind of look at the situation and go, okay, if you buy something in store, you can try it on, it's the right size. Whereas if you order online, it could be expensive, it doesn't come in the right size, and the worst thing is it doesn't look good on you. So you can kind of see the barriers with clothing. Though recently it's doing well. And I think clothing out of most kind of categories would be something that would go onto BigCommerce and do pretty well. So in terms of, as an indicator, we can kind of look at April, May and June and be very happy that things are likely going very well, and that their second quarter, when they announce in September the 9th, is likely to be quite a good one. That's my hunch anyway. So if it kind of exceeds 50% or plus in growth rate, I definitely think they can justify maybe a 7 to 8 billion valuation, which would be a bit more higher than what they have right now. Though if they only justify about 30%, maybe 35%, then probably just the valuation right now would be alright for them. So I think there's a bit more upside in the current pricing, whereas if you buy right now and hold for long term, I don't think you'd be too, you won't be too bad in terms of making a earning from your current shareholding. But I think if the second quarter is as big as I think it will be, I think the share price will be hitting a bit higher than the current situation. Though, we just have to wait for September the 9th, which is only a couple of weeks away, so, might as well just give it a bit more patience. And then, if we look at the rest of these things, leisure and outdoors, and home goods, there's just some stuff at the end of the day that people just prefer to go into the store, like say big item furniture kind of purchases. You kind of feel like you have to go in the store, see it, feel it, and then make a decision on it. So it's not one of those things you just want to just buy online all the time unless you had to. And that's what we're kind of seeing with these kind of products, where in May it was peaking, and in July it's kind of come back down quite a bit, and that's kind of normal because we're kind of seeing that these things, people just want to be able to see them first before they buy them. But I can see things like clothing as being one of those center points where people would probably create a store, sell their clothing, and people would be buying them online once they get used to it, because one thing about clothing is about measurements, isn't it? And whereas with beauty products, there's not really a sizing, you just have to make sure it's the right product fit for your skin or the purpose that you're buying it for. And car parts, I guess you just have to be an enthusiast to really know which ones you're looking out for. So in terms of the areas that are likely to do well, it would be like beauty, cosmetics, fashion, and stuff like that. Groceries, household items. Those probably are the three main categories that BigCommerce probably has going for it. And the likely case where people would be opening like a kind of online shop to sell stuff. So just looking at those three areas, it looks like it's quite a good trend in terms of where it's growing. So I think generally I'd say second quarter is looking pretty big for BigCommerce, though, you know, as that's a bit of speculation. We can't put any guarantees on that. Though I'd say given the recent extra, you know, funding that they have, the recent change in the market habits, we can kind of expect some very, very good things in the next 2 quarters from BigCommerce. And I can kind of see this valuation going a bit higher, though if it doesn't, this 5 billion valuation isn't too bad to get into such a, you know, stock where basically everything's working in its favor, where in the future you can kind of imagine if people aren't buying things online right now, they're probably changing those habits to do that in the future. So I can kind of see this company doing well regardless of what happens in the next quarter or two. Though if the second quarter is as big as I think it is, the valuation does have quite a bit of room to head upwards. Though it probably won't be a like-for-like comparison to Shopify, where Shopify is looking at, I think their recent growth rate was like 97%. So BigCommerce, where the prior quarter was just about 30%, has a lot of growth to justify before they can justify a higher valuation that might, you know, meet on a scale, you know, like a like-for-like basis for Shopify. Yeah, well, the minute they can get to, say, 50% plus growth, then I think the market's willing to give it a higher valuation that could be in that 10 to 12 billion valuation, though I don't think it's going to get there, but I think 7 to 8 billion is very realistic if they can get 50% growth in their next quarter results. Let me know if you've got any questions. Until then, good luck investing, everyone.